The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for TFNN, and for the second half of the show, we're going to have as our guest Bill Foster. Bill wrote the Rocky Mountain Financial Forecasting Letter for many years. He's been trading since the 70s. He has 3 different degrees, a couple in business administration and psychology. He is also a consummate astrologer on the same order that Arch Crawford is. And so he's going to be our guest in the second half of the show and talk about a $1 million trading opportunity that he sees. This is a real honor to have him on. Known him for a long time. He's basically left public life, I think, more than 25 years ago, just to trade on his own. So it'll be fun to have him on the show, and that'll be Bill Foster coming in at the break at the half hour. Now, there is something else that I think that it's really important. One of my favorite channels is the History Channel, and they have a new series out called The Men Who Built America, and I strongly recommend anybody that has anything to do with financial markets or living in the United States ought to watch this, because this is really well done. There's not one well-known actor in this. This is just a really good documentary piece. It talks about, Cornelius Vanderbilt and the railroads from 1875 after the Civil War. And then we had Andrew Carnegie and steel, John D. Rockefeller and oil, J.P. Morgan, and Thomas Edison with electricity, and then, of course, Henry Ford. But it's really well done. It's about, I think it's 10 or 12 hours. They do it in segments, so if you get a chance to watch this, it really shows the history of the United States and how our great country was built. And I think we will still be great. We might not be as great as we once was, but we'll be as great as we always was. So we'll see if that'll. If you enjoy that, I think you'd really like it. It talks about the reason why these guys were successful is they embraced the possibility of failure in order to succeed, and that they took fear for what it was, false evidence appearing real. So you should watch this. It's really great. It's called The Men Who Built America, and it's on the History Channel. Okay, now there is a couple of things we want to talk about. We had one of our frequent listeners, Mike from Toronto, Canada, ask about the double top formations and how they're formed and things like that, and triple tops. And so he asked for a couple of examples, and what I thought I would do, I brought up Newmont Mining because we've been following this stock since the double bottom was made in August. And as you can see, that it made the ABCD pattern, down at the August level. Many times it'll take out the high or take out the lows or highs by a little bit, and it's still a double top or double bottom. If you look at how the top was made in Newmont way back in 2011 up at $71 a share, you'll see that it made an ABCD pattern up there, took out the high by just a couple of points, and then, gave up more than half its value. So these are how these are formed. What's important about the Newmont is that last week, we gapped down and we had this very wide-ranging bar, which tells us that we were, in fact, it closed below the 618, and now we're heading down towards the 786 level. So that's one example of using double tops and double bottoms and those particular patterns. The next one I wanted to bring out is because this is also one that we've been following quite a bit, and that is the soybean market. This is a weekly chart of soybeans, and as you can see, it made a triple top around the 786 level during 2012 and 2011, and then we had the run-up in the drought. And here again, if you'll notice where the little marking is at the double top last year in August, right in the middle of the drought, we took out the highs of the previous 10 weeks by just a few cents, and then the market, broke down badly. And now today it's breaking down, below the 786, which is a negative sign in my opinion. So there's another example of how you want to watch double tops and double bottoms and triple tops. When they go above triple tops or go below triple bottoms, they usually go a very long way. So that's the beauty of this is the fact that you don't have to, risk very much if you're looking for those particular patterns. Now, the last example of double tops and double bottoms is the silver market, and we follow this one all the time. And as you can see, we made the double bottom, last January. We talked about that one. There again, you see that it made it with a beautiful A, B, C, D pattern, stopping, right where the old low was. It went below it by about a few cents at $26 per ounce. And then we had a rally up to the 61% retracement. And then we came down, and again, we made the third bottom, again taking out the low by just a few cents. And then we started the series of higher bottoms, and then we rallied up again to a 786 retracement, just recently. So these are how these double tops and double bottoms are formed, and at least that's how I think they're formed. And if you look at them, almost all of them will be formed, in that manner, in some variation or another. Now, our friend Mike the Trader also asked about about crude oil. And so what I'm going to do is discuss it a little bit, because I believe we're heading towards $83 a barrel in the crude oil. We have a big 786 retracement that is coming in at $83 a barrel. We're only $2.50 away from that, and we could be there by the day. And here again, this is one of those situations where you want to watch, how it gets there. If it gets there with a really wide-ranging bar of like $3 per barrel, you really don't want to be standing in front of that freight train. So you want to see how it gets to $83 a barrel. It's very, very important, to realize that this is how, we try to enter a market without risking very much. Now, I think it's important to cover a commodity right now, because we talked about this commodity on the air last week because it was such a critical level, and that was the corn market. And I'm going to put the chart up here. And we had the grain report came out before the opening on Friday. I was really bullish on corn because of those two patterns looking exactly the same. All I knew was that you did not have to risk much below $4.35 an ounce, $4.35 a bushel, and boy, oh boy, I'm really getting the prices messed up here. It's $7.35 a bushel was the number we were looking at the report. It opened around that level. It immediately rallied 20 cents and then has been giving it all back. And I want to bring up an up-to-date chart on corn right now, because it's very important to see how you handle these when you're trading them, because you have to focus on how much money you're risking when you do these things, and that's the real beauty of trading, is that you can control your risk. Now, I'm going to blow this up quite a bit so that we can see it a little bit better and see how we're doing with this particular chart. And I want you to notice that when you get in and take a look at this, you'll see that that 735 level had been the 61% retracement for the past month or so, and then when the report came out, it actually, hit that number again, rallied pretty strongly, and then today has been breaking down through that number. So the risk on that particular trade was almost nothing if you'd have gone into it, because it rallied in your favor. And then if it goes back below it, you don't want to touch it anymore, because if it goes through the 61% retracement, that breaks that whole pattern sequence that we looked at, and that tells us that we're heading down to the 786, and we went through the 786, and of course we had the really wide-ranging bar at the the 720 level, and so it's gone below that. It's gone all the way down to 712, and we're trading around 716 right now. So the cycle that we were looking for in corn, the pattern, just did not work. It worked for one day, but once it breaks these really critical levels, you have to respect them, folks. I'm a real believer in the Fibonacci sequence of numbers and how it affects these markets. So that's why it's so very, very important to follow these things when you see them, because when you see these patterns, because they really do work. They don't work all the time, but nothing works all the time. And that's the beauty of what we're doing, is that we have a chance, to get in some of these things, without risking, an arm and a leg. And that's what, trading is all about. It's not about the amount of money that you win. It's the amount of money that you're not exposed to losing. And that's the real beauty of what we're looking at. Now we're coming over something really important here. I'm going to go back in time a little bit and review, where we were last year when we were having all these eclipses that we have coming up right now, and you'll see that the astro part and the full moons and new moons and things were working, very, very well, during this time last year, and they were hitting them almost within a day or two. And what I'm going to do now is bring you forward into time to show you where we are, because I really think that we're getting really close to a bounce here coming in on Tuesday or Wednesday, because the market is oversold, and we've got the solar eclipse and new moon coming in on the 13th, so that would be either Tuesday or Wednesday. Then I think we're going to get a really good snapback rally into the full moon of the 28th of November. That's when we have the lunar eclipse and the full moon. And if that happens, I think we've got something set up that's going to be very, very ominous for the month of December. In other words, we'll have a really good snapback rally from November the 13th through November the 28th, and then after that, I think we have a chance for something really ominous to happen on the downside. The reason why I say that is the quality of the rally has been very, very pathetic in many of the indices, and the Dow Jones Transportation is still looking so horrible compared to the Dow Jones Industrials. That means a great deal, in my opinion, and I think it's something that needs to be addressed to your portfolios for your 401ks and your other retirement things that you have, because it's a very, very instrumental thing as far as I can see, as telling us, where we are with these particular things that we're, as far as the overall cycle of where we are in these markets, and that's why I think it's very, very important to, be watching it. Now, the rest of the world is going through the same type of corrections. I'm going to put up into Tiger TV the FXI, which is the China ETF, and you'll see that we made a bearish Gartley in that one a week or so ago, and we've been, coming down, quite quickly in that one. And I believe we also have one in the, I believe the Hong Kong market is. Before I get to the Hong Kong market, I want to put up the S&P, because Basil had this on the show also, and I think it's important here because we are trading below right at or below the 200-day moving average. And I put a 200-day moving average on my chart just to show you that the last time we went below the 200-day moving average, we only stayed there for 3 days, and then the market gapped up and rallied around 25%. So the moving average is a good thing to look at for overall where prices are, but you need to have something to enter the market if you're going to do. We got a break coming up here, and then I want to cover a little bit more of the lunar aspects, and then we'll get back to the show. 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the astro points of just the new moons and full moons going back to last June, and you'll take a look at those. They're within 1 day or 2 days. Sometimes they hit exactly on the day. Usually when you have an eclipse and a new moon or full moon, they're going to be pretty much right, spot on. That comes in on the 13th, and since the market didn't rally very much off of that little bit of Friday, we made a major ABCD pattern in the E-mini. We looked at that number 1366, I believe, several times over the last few days, and so it's made that objective. The question is, it might test it one more time, so we'll have to see what happens on Tuesday or Wednesday. But I wouldn't want to be short in here, but I would be looking for the market to have a pretty good bounce when we get to this bottom where we are. And if that's the case, then we're going to be able to to see that we're really close to where we want to be as far as the price level. Now, I believe that we have a chance to have a good rally after this, coming into the point of the 28th, and we'll see if that's going to be the case, and then we will we'll go from that premise on. The main thing I wanted to cover today was the fact that these lunar cycles have been pretty accurate. Second thing is the fact that corn trade that we looked at into that report would have yielded a very small loss, a profit if you'd have handled it right, but frankly you had to be a magician to be able to do that because it happened so quickly. But you don't want to be long the corn market right now, because it certainly is not acting like it wants to be going anywhere. And the other thing that we have happening is we have the VIX index that Basil also covered, is we've had those higher bottoms, and it looks like the VIX index still wants to get to this 22 level in the VIX index. So that's telling us that we have some more weakness coming down the road in stocks. So all we're looking for is a little bounce here, and then we will find out if this is going to be the place where we want to be looking at it. Now, with the Apple, we're way below our price target that we had at $566 a share when, we were looking at this at around 700 to 690 with that big butterfly pattern. Nobody, thought we were playing two French fries short of a Happy Meal. But now, we're breaking down badly, and Apple is also due for a bounce. It's made the 1.27 expansion of the last swing, so this is one of the reasons why we want to keep watching it. Now, I want to cover one other market on a foreign basis, and that is the Japanese stock market, because we've had lower tops all along here in the Japanese market, and we've had some rising bottom line here since last May. It's very important that this index stays above 8,500, because if it breaks above 8,500 in the Japanese stock market, that's going to be a very, very negative sign. Remember, the Chinese market is making a bearish Gartley, and so all of these things are fitting together that we are looking at something relatively sinister coming down the road. It really is. It just doesn't look good. And the main thing, and I should get off my soapbox here, is that this transportation divergence that we're having between the Dow Jones, it is just absolutely very, very negative. And it's a spot where you've just got to be, you've got to be at a point where you just really have to respect it. That's the only thing I can think of to say, what you really got to do. You've got to respect it. Now, the NASDAQ, we're going to jump to that thing because that's part of Apple. You'll notice in the Tiger TV I posted the NASDAQ chart, and it shows the ABCD leg that's been happening since the last full moon that we had way back in October the 5th, and now we're coming down into the new moon, and the CD leg is exactly 1.27 of the AB leg. So it's just expanded down to that level, and we're very close to a 786 retracement. So this is a place where a market will usually get its rally from, and this is the rally that's going to determine, what's going to happen over the next several months. What I'm expecting is a rally that will only last several weeks, but, we have to approach it a day at a time as you're doing this, because it doesn't know, you don't know which one of these is going to work, nor, of course, no one else does either. That's the real beautiful part of this, and that's the main thing. But the thing that's the most bearish of anything is the fact that the Dow Jones Industrials versus the transportation looks absolutely horrible. This is the worst divergence in 130 years. Ever since they've started keeping data, never has there been a divergence between this. We've got to take a break, then we'll be back with Bill Foster from the Rocky Mountain Forecaster.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Okay, we're back, folks, and I think we have Bill Foster on the line. Are you there, Bill?
I am here.
It's good talking to you. Hey, listen, thank you very much for taking time. Those of you that don't know who Bill is, he was very famous back a few years back. And with the Rocky Mountain Forecaster, his predictions were really startling, and then he retired to be a private trader. So you were going to share a $1 million trading scenario possibly for us?
Yes, I am.
Okay, and listen, after we do that, there might be some people call in and ask questions. If they don't, I have a couple questions that I wanted to ask you anyway. So go ahead and tell us, what you're looking at, and then we will go from there.
Thank you, Larry. Hello to your readers today. This is the $1 million trade in stocks and gold. The basic idea of this trade is that now that the presidential elections are over, the gold market is primed to go up for a number of reasons. I guess the big one is the fiscal cliff you've all heard about, where dire things are going to happen to the U.S. economy and the world economy if the lawmakers in Washington don't get their act together, which is, probably a large bet that they won't. The other trade is a short position in stocks. In other words, we're betting that stocks are going to go down, specifically the S&P 500 E-mini, otherwise termed the ES contract. So the trade today for the $1 million trade is the S&P ES is going to drop like a rock over the next weeks and months, and gold is going to rise from its current value of approximately I don't know, 1,700, and the ES is priced at let's see, I'm not sure.
Around 1380, something like that. Yeah.
Thank you, 1380. So that's the basic setup. Now, to take this trade, we have to take it in options, because options on futures. Futures is simply too expensive in terms of the volatility is horrendous, and you would have to put up a huge amount to back your account. So the trade vehicle is options, and you would buy out of the money puts and calls. So if we're betting the price is going down, for example, in the ES contract, we would buy puts, out of the money puts.
Do you have a specific strike price that you're looking at, or do you just leave that to the person to determine, what they want? What do you think the target will be? Do you think it'll be below 1,100 in the S&P?
Oh, definitely. Okay. I'm looking at over, say, a year that the S&P will drop by half and that gold will double in rough numbers. So you can see that your readers could pick up an out-of-the-money put in the ES or a call in gold for very little, say $150 to $1,000 in that range somewhere. So in terms of what strike, I'm leaving it up to your readers, because I don't know the size of their capital.
Oh, these are big players in here. Let me tell you, they're all well-heeled. No, they're just normal people like you and I are, Bill. They go through the same things that everybody else does, but they're a nice group of people. But what I will do is I have some friends that do a lot of puts and calls, and what I'll do is I'll look at some, maybe say 1,000 puts in the S&P, and whatever, anything around $200 or $300 for a put that's out that far, I think would be fair enough, don't you? I mean, you don't have to risk very much, and if you're right, you'll make a great deal.
Well, absolutely, Larry. That's the idea. So in terms of the three-stage rocket I was talking about there, if you buy, say, 100 out-of-the-money puts and 500 real far out-of-the-money puts and 1,000 far out-of-the-money puts, you've got that three-stage rocket, so that if the price does go in your favor, you cash out that first-stage group of 100 puts, and then and that pays for your trade, basically, right there. And then you've got the second stage on the 500 puts you cash out later, and then if we make it to the 1,000, you're a millionaire by far. You're probably a millionaire at 500. Same thing on the gold, only it's the other direction. You're buying calls because we're betting the price is going up.
Now, you believe then gold's going to go way above 2,500 an ounce then?
Absolutely, I do.
Okay. Bill, I have a question. Most of the folks don't know who you are, but I do, and you've done a great deal of research in, the astro part of this. Are any of the things that you're basing this on have anything to do with the long-term astro implications?
Oh, absolutely. I know your fans, some of them at least, are astrology-based and very concerned with that kind of thing. And as you know, we met a long time ago when I did a lecture, I think it was in Boca Raton, Florida, or somewhere in there, and was talking about that very thing. And it's astrology-based in terms of the support and resistance lines to enter and exit the trade, the aspects that are coming up in transiting aspects that are just going to turn this world upside down. For example, Uranus squared Pluto. We've had one already, and I think we've had two already, and we have another 5 to come. And we've seen some of the problems that have come up with the Arab Spring and the economic situation and the volatility in futures and other things. So, yes, it's definitely astrology-based.
Okay. I have I have several other questions, but one of the questions that I have is what do you think is going to be the end result of the bond market, with all the lower interest rates that we've had for the last 30 years?
The bond market, my God. Yes, there is a problem. The Federal Reserve has nothing left. They cannot lower the interest rate. It's already to zero. And this is the same story in Japan. And we saw what happened there. 20 years of a malaise market going nowhere except treading along the bottom like a catfish. So the bond market is ripe for a huge plunge in terms of if the U.S. can't raise the capital to fund this continuing huge amount of debt, we're talking $1 trillion, by rolling it over, they have to raise the interest rates. And as the interest rates go up, prices go down. That inverse relationship is carved in stone. So the bond market...
Bill, I don't know if you remember a movie from, I believe it was 1980, called Rollover with Chris Christopherson and Jane Fonda.
Yes.
It was about the same scenario that you just talked about, was the fact that they were not able to roll over the debt, and that was the problem. And I think, this is my own personal opinion, I think Bernanke will be either be chastised or run out of town on a rail by the time it's all over, because what he did is not good economics, and it was experimental, and I think that that's what history will be his demise, because he didn't want to live through a second depression. He said that would never happen, and, we always become what our worst fears are, so that's my assumption is what's going to happen, but, we'll see what history says.
Absolutely, Larry. I agree with you completely, because what really needs to happen is that we need to go through a recession and cure our system and wash out all the old debt and set it up for new innovators and new creations and new companies. Well, the political parties that be don't want to do that, because what they're concerned with primarily is getting elected. And to them, getting elected means protecting jobs that should no longer be, that have gone by the wayside, etc. And we're not going to face the music in this country politically and economically. And therefore, we're going to bump along with this huge credit bubble over our heads until some catastrophe happens and the interest rates do go up, because the U.S. can't roll over their debt, and it's just going to be a mess, a huge mess. What this precipitating event is, I don't know, but it's something out there that's going to happen, and it's going to happen soon.
There's the word I like, soon. Can you give us a time frame? How do you feel about these eclipses? We got one coming this week, another on the 28th. Would this be in the time frame of what you're looking for?
It's certainly a start. I think that usually an eclipse is set off by some event down the road. A transit, usually a sun transit, is a square to that natal eclipse because it's 30 days later. So the sun moved 90 days, and it sets off that eclipse. Or it could be something else. It could be a Mars transit. It could be a number of events. Now, later in the year, I think it's December, the first week in December, I want to say the 4th, we have a transiting Saturn. It's a declination aspect, not on most of your calendars. Transiting Saturn, contraparallel Neptune, I believe. I'll have to look that up. Something like this is prime fodder for setting up this type of an event. And the eclipses, though, to answer your question, I think are just the start. They need to be triggered by something, and some transiting aspect or something else. So we'll have to wait and see. But in terms of time frame, I think is what you're searching for here. And I'm looking at between, I would say now and the end of the year, for the ball to start to roll really seriously downhill.
Okay, one of our viewers sent me a text message asking about the amount of studying that you did to come up with this, pretty dramatic and drastic forecast. I mean, not many people are looking for the S&P to drop in half and gold to go above 3,000. So, Bill, I know you. He doesn't. So I know that when you do this, you do a lot of work, because that's where you spend most of your time doing research. Can you give them an idea of just, the type of things you were looking at when you put this into perspective? I know you alluded to it a little bit earlier, but maybe to sum it up, what the bottom line was when you came to this final conclusion.
Absolutely, Larry. I've been studying futures and commodities for 30 years. 3 university degrees from California State University, Northridge as a business major, a psychology major, and a master's degree. So I have the background in terms of academic to bounced that off of the astrology, which is kind of an unusual combination. And I've been looking at markets and astrology research for 30 years. So what made me come up with this research is a number of factors involving cosmobiology and a bunch of different studies, metaphysics, etc. And I don't know, it's part of it is I have a very strong intuition for a man, very strong. I can read minds. I do other psychic things, and it's just the time is now, and it's going to be this. Don't get me wrong. This has huge implications for the world. This is just not a financial thing. This is a mass transformation of the world itself in terms of economics, sociology, psychology. Borders will be redrawn, and they are being redrawn in Africa and Egypt and other places, and it's spreading. So this is a mass scenario that's connected at an incredibly high level, and it's going to affect everybody to a tremendous degree. So this is like, make sure your car is gassed up and you can get a gas tank out of town, or preferably you have an underground house somewhere. I mean, we're talking serious stuff.
We could go live with Arch Crawford. He's already got all that stuff built in.
There you go. My kind of guy. I know Arch.
If you could repeat that part about the three-stage rocket. One of our listeners asked about if we could do that.
Absolutely. The three-stage rocket is, in terms of buying options, let's take one direction at a time, because we're talking puts and we're talking calls, and it's kind of confusing. Let's take the fact that I think the S&P 500 is going to drop by half. If that's true, what we want to do is we want to have an out-of-the-money put option in the S&P. And you said that the S&P is currently, what, 1,300 something?
1380 roughly, yes.
Yeah, 1380. Okay, I'm just bringing it up here on my screen, the ES contract. There it is. Okay, 1380. So, yeah, I see it here on the rolling futures. It's around there. So we would want a strike price out of the money, so it has to be below that price. My rolling futures, make sure I've got the right contract here. ES, the most liquid futures contract in ES is
December right now. It'll be moving to March pretty soon.
Absolutely, 1376. So we want an out-of-the-money future strike price below 1376. Usually the big volume is in the even numbers, so it would be at 1350, 1300, 1250, etc. So let's start at, let's say, 1350. That would be out of the money. So you would buy, the first stage would buy, let's just pick a number, 10 S&P 1350 put options.
Bill, hold on with me one second. We've got a short break here, and then if you'll stay with us till the end of the show, would you mind doing that for us today?
I would love to do it, Larry.
Okay, we'll take a break here. We'll be right back with you.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back with Bill Foster. Bill, I have one other question, personal question. What do you think about the Mayan calendar forecast that we're not even going to be here on the 23rd of December?
I have a funny post on that on my blog, and two Mayans are carving this stone, and they're working on the stone tablet. And one Mayan says to the other, I ran out of stone. This is going to really freak some people out in the future. So
that's probably pretty good. I would think that's excellent. Oh, Bill, is it okay if I post your blog into the Tiger TV? So if anybody wants to blog you, they're able to do that, or?
Absolutely. Post all my contact information in there. I'd be happy to answer any of your readers' questions, your listeners' questions.
Oh, that would be great. Now, I wanted to ask just a tiny bit more about the history of this, because I was watching this special on History Channel about the men who built America, and and Cornelius Vanderbilt, started building the country with railroads in 1875. But so many of the things that happened between 1875 and the end of the 19th century or 20th century, they seem to be repeating themselves over and over again, which I think leads a lot of credence to what you're looking at. And we're trying to, not have a recession, and we really need a recession just to wash things out.
Absolutely. Their history does repeat itself, and as you mentioned, the railroads of 1875 and the Vanderbilts, there's a lot of time frame. I have a financial model that looks at past prices and tries to match that up with current prices. In other words, it takes the S&P 500 for 2012, and goes back in history a year at a time and matches that price action in terms of the percent change to various instruments, the S&P gold and everything else, and it comes up with a match. And it's amazing how close that is. There are several periods back in time that match up with each one of with the gold and the rest of the indices. So you're right. History does repeat itself, but I don't think we learned the lesson. That's the problem.
Yeah, that's true. And then, regarding gold, that they tried to take they did take the gold away from people during the 30s. When we went on the gold standard, they made gold illegal to hold from, I think it was 1932 up until 1972 when Nixon took us off the gold standard. So there's always a possibility that they're going to try to, take gold away from us. I don't know if that'll happen anymore with the free markets that we have, but there's always that possibility.
It's possible. When Nixon took us off the gold standard, that sowed the seeds for our current problems, because it no longer tied the dollar to gold. Therefore, Congress could create money to dole out to special interest groups, etc., to do all these terrible things and run the debt up.
Yeah.
And
do you think the U.S. dollar will collapse, Bill? Do you think that's going to be the thing that's going to make the bonds, go down quite a bit and the stocks go down quite a bit? Do you think the dollar will just disintegrate, or what's your feeling on that?
I think it's part of a larger picture. Eventually, it won't collapse, but the dollar will weaken a tremendous amount, and it depends on a number of scenarios here. There's some countries, as you probably know, that are trying to find another base except for the dollar, because the dollar trades, oil is priced in dollars and gold is priced in dollars, and a lot of people don't like that, especially people in the Middle East and Russia. So there's a lot of contracts that are out there that are pricing things in other than dollars, in the Brazilian real and on the euro, etc. So, people are calling for the demise of the euro too about every other week. It's not going to be that easy, though.
Well, listen, we're at the end of the show now, my friend, and I certainly appreciate it. And if time permits, we'd certainly love to have you back on again.
Anytime, Larry. Give me a call.
Okay, Bill. Thank you very much. Bill Foster of the Rocky Mountain Forecaster, an old friend from 35 years ago. Take it easy, Bill, and happy holidays to you.